Hello Wolfpack, Bitcoin is the topic of analysis today, and Bitcoin on the last daily candle close, which happened just 15 minutes ago at the time of recording this video, about an hour ago by the time this video gets out, has just managed to close above the 50-day SMA by basically the skin of its teeth, by basically the needle in a thread. This thing is very close to dropping below the 50-week, and we actually 50-day, and we actually tested it very extensively yesterday and just managed to close above, and that's good to see on Bitcoin, and that is kind of consolidating with now two closes just above the 50-day that we might be seeing, or it's quite likely that we will be seeing a bounce here on Bitcoin. However, there are other things we need to be getting into that goes a bit deeper than that. And one of those things is the fact that, well, we're in the long-term ascending channel formation. We've been rejected on this entire move up off the 100 EMA, far below where we actually needed to get, right? We needed to get above 48K, which is this thick blue line here. 48K is where we need to kind of conquer in order to be bullish on Bitcoin again. And why is that? Well, getting above 48K would mean getting above the Ichimoku cloud, getting above the bull market support band, getting above the volume profile, POC, and getting above the Gaussian channel. And also on the weekly chart, getting above the 50-week SMA, which we'll look at in a second. So 48K is very much the critical breaker for Bitcoin. And at this time, we haven't managed to get above there. Now, it might be a stretch, but this is the hourly chart, and I'm noticing some similarities in terms of structure here from the hourly chart and this structure that's been forming to the entire structure of 2021. Again, it might be a bit of a stretch, but fractals are meant to be stretches. Fractals don't play out perfectly every single time, and they just need to be similar. And what I'm seeing is a pretty amazing similarity, actually. We have the first move here. We have 1, 2, 3 separate peaks. We have a peak that's lower, and then we have this formation here, okay? On this thing, we had the same, right? We had, for example, the first move here, we had 1, 2, 3 peaks, okay? And this is the sub peak here. And then we have this lower formation, and then we have this structure down here. And even in this lower structure, we've seen a little bit of chop, and then we saw a little dead cat, a bit more significant than the other chop, and then back down. And what we're seeing now is the same thing, right? We saw a big chop jump, and then like a little bit more significant than the other chop, and then back down. So I would say that's a very similar structure. And what that would suggest, well, it means that on a shorter time frame, what happened after July here on Bitcoin? Well, after July, after a little bit more extensive chop, we ended up breaking to the upside and retesting higher support. Okay, so it wouldn't be surprising for me on Bitcoin, given the fact that we've held the 50-day SMA as well, that we, if we break upwards, that wouldn't surprise me at all. And if we break upwards for a test of, say, 45K again, or maybe even 48K, that really wouldn't surprise me. But the thing is, though, we can't be too certain about this kind of things, and this is a very, very important point that you should be listening to, right? The Federal Reserve is holding a meeting, I think, in Australian time, about 48 hours from now, on February 14th, at 11:30 a.m. in New York time. The Federal Reserve is holding an emergency meeting in which they very well could be raising interest rates early, which will lead, or is very likely to lead to, a traditional market correction on a pretty mass scale. It's hard for something to be priced in when it's happening 48 hours in advance and the market's only down 6%, especially when it's happening over the weekend in the US. And so there could be a pretty large correction in traditional markets that could actually sustain for a long period of time, because we could actually enter a recession depending on the effects of that. We just don't know yet, simply. And so that could destroy any TA structure that forms on Bitcoin. And so that's why, regardless of what it looks like, regardless of what I think is going to happen, I'm very well aware that there's a lot of fear in the market right now, and that it may act completely unpredictably, and we may even just drop, right? And that's why I advocate for caution here. I don't advocate for getting into trades. But regardless of that, going into the theory of a bounce, well, what we do have here on Bitcoin is this fractal from 2018. I've kind of extracted it straight out of 2018 here, as I've just circled, and applied it to the current price action. You can see the similarities here are absolutely insane. It's scaled up to be larger, but other than that, I haven't changed the actual the horizontal length of it, and so it's kind of just very similar on a base scale. We had a very similar September bottom, very similar double peak here, and then a very, very, very similar drop down. And what we're actually seeing now on Bitcoin in terms of the actual price action in the present day is, technically, if we go up, an inverted head and shoulders pattern, okay? In the very same region we're doing that in 2018, as you can see in this purple fractal, we saw an inverted head and shoulders pattern, and we actually went up and retested higher resistance before dropping down further. That's pretty crazy, right? That's a pretty crazy resemblance there, that we're seeing an inverted head and shoulders at the exact same time we saw in 2018 after an identical move for 3 months. That's insane. And yes, it would suggest we see a dead cat, would suggest we see a further dead cat in which we go up quite significantly. But it would also suggest that, well, the bull market's over and eventually we'll end up at the 200-week SMA, which is my long-term prediction for Bitcoin. Eventually we'll end up in that 20 to 24K region. Now, looking into a little bit more here, what we can see, and I've looked at this quite extensively in the past, and those of you who watch my videos would have known this, we have very insane similarities between 2018 and now in terms of how we've lost the 50-week and how we head down to the 200-week, right? We lost the 50-week in 2018. We went down for 4 weeks. We went down 25%. We bounced up 45% in 5 weeks. We rejected off the 50-week, and then we went down to the 200. So the key structure is losing it, coming back up, rejecting, going down. And we did the same thing. We're doing the same thing right here. We lost the 50-week. We came down 32% in 4 weeks. The time frame is exactly the same. The percentage is similar. And now we're going up. And if we were to reach the 50-week right now, it'd be 45%. If we were to reach it in 2 weeks, it'd be in 5 weeks, which would be exactly the same as 2018 as well. And then we can assume that if that happens, we reject off that, we would come down to the 200-week SMA, right? So basically, we're in a very identical structure to 2018 in terms of a fractal and also in terms of actual price action and what's going on in regards to the 50 and 200-week SMAs. And so just to wrap this up then, I suppose you could ask, well, let's look at volume. Actually, we haven't looked at volume. I haven't even looked at volume this morning. We can see that in this downwards trend, volume's decreasing as well. And so that would be a suggestion that, hey, maybe we're going to be seeing a further bounce from this region. And I really want to encourage people not to get bullish on this bounce, right? Unless we can break 48K, unless we can bring back some significant resistance into support, it really doesn't mean anything. It's simply following the fractal. And hey, look, even if we break 48K, are we just going to deny the similarities here between these two fractals? It seems a bit irrational to do that. And then when you consider that, well, the Federal Reserve could be raising interest rates as soon as 2 days from now or as late as March 15th, there's a lot of fears to be had in this market going into, some pretty intense times in the macro situation. And so I'd be staying cautious. If we do break 48K, which I don't think is going to happen at this point in time, but if we do break it, I will reevaluate. I've previously said if we get above 48K, I'll be bullish. I'm not gonna say that anymore. If we get above 48K, I will reevaluate. Right, I will look at it objectively and I'll try to determine what the next step is. Because right now, there's too many macro concerns to be bullish in any state of the market, in my opinion. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next one.